All right, so recently, international credit rating agency Standard & Poor's announced that it lowered Nigeria's credit rating to negative from stable in their revised outlook. This is, of course, according to them, due to declining foreign exchange reserves held by the CBN. With this outlook change, all three international rating agencies, Fitch, Moody's, and S&P, have a negative outlook on Nigeria's sovereign credit rating. Meanwhile, Nigerian firm CFG Advisory Group has released a report that provides an evaluation of the macroeconomic trends in Nigeria using relevant data. Mr. Adetilewa Adebanjo joins me in the studio, the CEO of CFG Advisory Group, for more analysis on this report. Did I get your name right, sir?
No problem. Right on. Thank you.
You're very welcome, sir.
Good morning.
Good morning to you. So, first off, has the coronavirus outbreak, has that altered your outlook for 2020 for the country?
Well, I mean, definitely. I think not only for the country, but I think you can see the reaction to that virus, to the pandemic now, I believe what it is.
Yes.
You can see the reaction to that on a global scale. And clearly there's a slowdown in China. And it looks like China might be exporting some of that slowdown to the developing countries. And we're quite vulnerable to the economic headwinds, particularly the oil prices. As you can see, the oil is now trading at what, $52 a barrel?
Correct.
And quite clearly, you're seeing that our Nigerian budget was premised on $57 a barrel.
Yes, yes.
So you can see now we've lost $5 on each barrel in terms of our projections. So clearly, the projections we've made on our budget basically is off. And it's important that we have also been struggling in Nigeria with revenue mobilization.
Correct, yes.
And if we have this sort of shortfall in revenue from oil, which is normally the surest source of our revenues, then it is a source of concern, and we have to revise our estimates.
Speaking of estimates and revision of estimates, I want to get to GDP growth in your reports. So I just want to get your thoughts on this here. The IMF, they've revised their estimate. In fact, we're talking about revisions all day now. The IMF have revised our estimate for GDP growth to 2% from 2.5. World Bank, they, I believe, have looking at 2.1. Federal government of Nigeria, though, has a very rosy estimate of 2.93%. I just want to get your thoughts on, I guess, the divergence, between the estimates and where you see growth. Are you more in line with the IMF and the World Bank, or more in line with where the federal government is looking at for 2020?
Very important. You can see when you begin to see this sort of divergence in views, you understand that obviously there's issues. People have different perspectives on the outlook of the global economy. And obviously the World Bank and, of course, the IMF are looking at this from the global economy, the issues with the headwinds, and they're making their revisions in terms of their estimates. Most of the developing countries like Nigeria are very sensitive to shocks, such as oil. It can go either way. But what is important for us in terms of our GDP is the fact that Nigeria should be growing at least 6% per annum in order for us to have sustainable development. So if we're still talking about 2% GDP, whether by even with our own best estimates, it's still lower than our rate of population growth at 3.5%.
Right.
So therein lies the challenge. And if you take a look at the economic recovery growth plan of the government, they had a projection of the economy growing 7% this year. So, so there is a lot of adjustments that needs to be done. But what is more important is that the government has to, with the Finance Act that was passed, we have to back that up with more policies. And we have to see some sort of structural reforms that will create the stimulus to grow the economy. If we can see that policies and those stimulus that will lead to economic growth, then we can begin to see maybe 5-6% growth. But in the absence of that, I think people are becoming more conservative.
Now, speaking of being conservative, just to follow up on you mentioning the Finance Act, the VAT increase from 5% to 7.5%. Some have said, I mean, if you look at us, comparing us to other countries in Africa and around the world, it's still pretty low at 7.5%. I mean, your Ghanas, your Ivory Coast, your South Africas, theirs are double digits. Now, I understand the tight spot the federal government is in, right? You don't want to raise that too high on people because of disposable income, but it's still considered to be low. But are you in line with that increase? Do you think it should have been higher, or looking at that particular VAT?
You see, with the VAT,
yes,
what you need to do is timing. Everything is about timing. If you make a gradual increase over time, then you don't feel it that much.
Right.
But when you enter into a situation where you're tight with revenue mobilization and a time where the economy is not growing as well, and you increase VAT and you put a tax on consumption, you're removing a stimulus that could create economic growth. But we have to wait and see, maybe by the end of the mid-year, to see how the VAT revenues are increasing or decreasing or on the decline. But, you know, it is low, and I think that, but government needs to make an effort to be able to increase that over time to get it to optimal levels. Fantastic.
Now, again, back to your report now. Looking at the sector contribution to GDP, oil was about 8.78%, non-oil about 91%. However, on the FX side, oil is still the cash cow. How do we get away from that? We've been talking about this for years. You know, your report breaks it down. How do we step, diversify away from oil being the FX cash cow that we depend on so much?
I think that's the irony, because you see that if you take a look at the contribution of the oil and gas sector to GDP compared to agriculture and the revenues they're bringing it, there are lots of distortions in that sector,
right.
Hence the issue of diversification. So that is the problem we have, and I think it's a problem that we still need to look at, and we begin to see how we can resolve that problem. But I think it's structural reforms in terms of policy shifts to be able to encourage production into particular sectors. We talk about agriculture all the time, but if you don't have a value chain within the agri sector that will be able to support a lot of products such as rice, even sugar, then it's not going to work. We have 3 refineries, sugar refineries in the Lagos port that has the capacity to probably supply the whole of West Africa and beyond. But a lot of the molasses and the raw sugar is still imported. If we can increase local production of sugarcane in Nigeria to support those refineries, or even bring that from the rest of Africa, we can begin to see more value creation. So those are the sort of investments that we need to make to begin to see that shift or that diversification. But again, that's the bane of Nigeria, and those are issues we also need to address.
I'm glad you mentioned sugar production, for example. So some of the firms that produce sugar here, they've complained of smuggling coming in and affecting their margins through the border. So the borders are now closed, and I take it that most of the players are happy with that. But then there's the effect of the borders closure on inflation. Where do you stand as far as the border closure and how that's affected prices of?
What is important is that the right things need to come through the border. That's all I need to say. And we have a customs, and the customs need to be able to be more vigilant and be more effective in doing their jobs. If the right things are coming in through the border and the right things are going out of the border, then we're fine. On the short term, yes, it's fine to be able to send the right signals through, but you need to put in a sustainable structure and a system to be able to ensure that things are working out properly.
Fantastic. Okay, back to oil production now. Your report also breaks down oil production from 2016 through to 2019. We can't seem to break past 2 million barrels per day. OPEC is meeting tomorrow, I believe, in Vienna, OPEC Plus.
Yes.
And there's, you've mentioned oil prices already, where they are. They're talking about cutting. Can Nigeria afford to comply? I think, I want to get to talk. Can Nigeria afford to comply with those cuts, considering where we are and how much we need to get from?
Well, that is quite an interesting analysis you've seen, the $2 million breakthrough. I'll tell you something. If you take a look at that analysis and stretch it back further, Nigeria hit 2.5 million barrels for the first time in 1977.
I wasn't even alive then.
Exactly.
Wow.
So, so what we're trying to say is that what that means is that we haven't invested in our oil industry, and basically it's the investment to break $2 million per day barrier for a very long time. So that just shows you that we're not making the right investments in increasing our oil productions and outputs. But I think OPEC is always very sympathetic to Nigeria's cause, and I think they'll probably let us stay at about 2 million barrels a day because they know that we might not even achieve 2 million barrels a day.
Right. Okay, another thing I like in your report, you broke down the quarter-on-quarter sector contribution to GDP. And in particular, I saw, trade, electricity, real estate. If you look at Q3 of 2019 and Q4, these sectors are in a recession, right? So, as far as being able to, how would you see things in trying to galvanize the trade sector, electricity, real estate especially has been? I mean, yeah, we're looking at the chart nowadays. It's not been pretty at all, So, what are your thoughts on how to get these sectors to be more productive?
Well, you see, it's when you do this analysis, you now begin to see what is actually dragging us down.
Yes.
Because you see, some sectors are doing close to 10%.
Yes. Like ICT.
ICT
yes.
is doing very well. You're looking at 10%. The banking services are doing well. But you can see, those are the main sectors of the economy. And that has to do with aggregate demand. And the fact that, your population and the GDP numbers, those are the factors that affect GDP.
Right.
So if certain sectors are doing well and the others are not doing well, the question now is that, trade is an issue. How do you create the stimulus to be able to improve those sort of sectors and to be able to create an enabling environment to be able to get purchasing power? Don't also forget that when you have your economy growing at 2%, you've thrown 120 million Nigerians into poverty, living on less than $1 a day. So if if that segment of the population, or over half of your population, does not have the aggregate demand and the consumption and the spending power, then how do you create the stimulus to grow your economy? So it's important that we grow this economy at 6% so that we can be more inclusive and bring 120 million out of poverty.
Mr. Adetilewa Adebanjo, CEO of CFG Advisory Group, thank you so much. We've done so much more I wanted to ask you about, but I appreciate your time. Thank you. We'll have to have you back to talk more about the economy and your outlook. Thank you so much, sir.